Good morning, everybody. It's Christopher from Serene Education with the 4 majors analysis update for the 26th of September 2012. Hi guys, euro against US dollar to start with. Out of our 4 majors this morning, let's have a look and see what's been happening on the daily. You can see I have all my support resistance trend lines all plotted in, and what I'm really interested in is this break previously of 1300, primarily because of that major support and resistance level here that we had at the start of this year. Since then we've had a noticeable pullback, so I've taken the low here we saw in late July to the high in mid-September, and I've plotted my fib retracements, and you can see that we've now had a break of that 2900 mark. You can see 2 prior days of consolidation at this level at the 23.6 here at 12900. This morning in the Asian session we've seen price moving lower, and as it stands now on our intermediate trend on the daily in particular, you can see that price is going to be moving back towards that institution moving average roughly around the 12800 before we see price coming in to play with the intermediate uptrend on this chart roughly around the 12800. So look at our intraday charts, you can quite clearly see that now the CTC has gone red across the board. From those highs here at 1500 we've had the break of that 1300, you can see I've put it in, and a nice consolidation break here of the 2900, which happens to be our fib retracement 23.6. A lot of support through here over the past couple of days. However, we've had a nice juicy break below that as of the close of 6 a.m. GMT this morning from the open on the Asian session, and you can see my RSI is nicely trading below the 50 period moving 50% line, which confirms to me this is negativity. So intraday intermediate trend is negative, so we'll look down towards the institution as a long-term target. Daily we should be looking around the 1275, which would be a great little target to go for, which would be our 38.2 fib retracement area, which will bring us back towards that institution moving average intraday. So as it stands now, good opportunity to get into this trade. You can see that everything on an hourly, my entry is looking fantastic. I get lower swings. I've broken through the institution moving average just now. I've been trading it. There's more red on my histogram than positive. You can see that the RSI is spending more time below 50, which is telling me the sentiment's negative. We just needed a break of this consolidated range at 1290. We have it now, so looking towards 1275 as my first target long term. On to sterling. Let's have a look and see what's been happening. You can see on the weekly quite clearly here, it just jumps out at you. We've had an indecision candle at a major resistance level, and now we want to see a bearish engulfing candle to show us potentially an evening star formation, which would set up long term a major negative sentiment outlook. Clearly here at 1600 we want to see either one or two things after an indecision candle. We're going to either see resistance, the price is going to pull back, or we want to see price bashing through this resistance level that we've quite clearly seen over two periods, weekly periods through April and May. Got to see a clear 16300. Failure to do so would see price pulling back, and in that pullback we want to see a nice bearish engulfing candle, which would then potentially tell us that we're seeing a 3 candlestick pattern formation, which is an evening star at a major resistance level at the top of a trend, which would constitute to a definite pullback, and that pullback would be relative to where the sentiment lies. We could do a fib retracement from the all-time lows here in June to give us that indication. So as it stands now, we're seeing clear resistance at 16300, so now we want to see where it's likely to go to. You can see a massive on the daily now. You can see that clear resistance level above us. A lot of indecision as we've hit into it, and now you can see that there's a swing low. This candle over here, yesterday's candle, falling lower than this little consolidation support here just above the 16200, and you can see that the CTC still remains blue because we're still in an uptrend, and we're still trading well above that institution moving average. So now we need to move into our 4-hour time frame. You can see the consolidative range. I've put it in, I put this box in, and now for the first time we've had a little juicy candle break lower than that 16200. RSI has now failed below the 50% line, and you can see that the RSI sentiment lies negative as we've gone into this consolidative range and testing higher highs. RSI has noticeably dropped to the downside. So now as long as it remains below 50, we're trading below 16200. We should look for opportunities now to get into this at the low of this 4-hour candle break here at 6 a.m. GMT close. Look for a target to the downside, if anything. Now you can see the retracements I've put in here. You can see quite clearly the start of this little move to the upside here just recently through the latter part of August. I've taken a fib retracement from those pullbacks all the way up. You can see this is just pulled all the way up. You can see 23.6 is now in play. get below that 23.6. You can see the price is just trading just slightly below that area there. Get below that, and then we should be targeting 1610, which would bring us back towards the long-term Fib retracement, i.e. the all-time low that we had here. If you look at the daily, for example, let me bring the daily up to this June low, all the way up here to the high that we're currently seeing at 16300. That target would be ideally our long-term target here at 1605, just above 1605. But you can quite clearly see intraday, you see a noticeable pullback, and then price has really rallied since then. So you can take the low of here and project to see any into smaller time frame targets. You can see quite clearly back towards the 20 period moving average, which would constitute the 1610. And then you can see that we're going to a consolidated range. There's quite a lot of movement in between this, followed by the 61.8, and then back towards that 76 or 78.6 mark, which would be, bear with me for a moment, just stick that in. There we go. On our daily, back towards this major price support and resistance level here, the break just below the 5900. So those are all been plotted on my 4-hour chart. You can quite clearly see now that we have a clear break, just a slight break to the downside. That negativity now over the next 4 hours has got to continue lower. As long as we find resistance now in this area here at the bottom end of this breakout here at between the 1620 and lower, we're going to see price moving to the downside. We have a lower swing now formed on the 4-hour chart. RSI is below 50, so things are looking positive to the downside. That negative sentiment is genuinely looking to look like it's going to fall. So my hourly entry candle, you can quite clearly see now that we have, as price has been trying to make those higher highs, i.e. making higher highs here quite clearly, swinging high. You can see the RSI on my hourly has definitely dropped to the downside, and now you can see that there's more RSI spending a bit more time below the 50% line, which is telling me that sentiment is looking slightly negative for the time being. You can see the institution, my hourly, is way above price, as well as my two smaller time frame moving averages. You can see the past down finding a bit of resistance, and now you can see the candle that is in play right now, which would close at 8 a.m. GMT this morning, which is right now is still trading below that all important 23 Fib retracement level here at 1700. So, you know, the CTC is on the other side. So look to see if a nice opportunity for bearish engulfing candle at the underside of this one over here to confirm that we should be seeing or looking for opportunities to the downside. You can see the intermediate trend right now as we see it is, you can see the RS noticeable drop, pull back, and the continuation in the direction of the breakout. So you can see that everything's looking great at the moment. Now we just need to see a nice bearish engulfing candle on the hourly at the underside of the 1617 to push it lower, and then we should be targeting these levels to the downside here as 1608 is your first target intraday. On to the US dollar Swiss franc. Let's have a look at this pair. On the daily, you can see I've drawn my support and resistance levels, and I plotted my major support and resistance in terms of the major high here at 1000, which was a long-term support and resistance level. Price has now pulled back since then and has targeted another major support and resistance level here in the shape of the 930. Prices had consolidated under this level here for a number of days before we saw a breakout, and price has now moved to the upside, targeting the Fib retracement. Now I've drawn a high here at the high to the low, this consolidation low, and price has now come to the 23.6% line, which is the underside of the institution moving average. If anything, what we want to see now is a bearish engulfing consolidation here at the underside, which would be in the same region as the intermediate trend low, which you can see my swing lows depicting downside movement here. And if that's the case, then we should be targeting the 930 as our long-term target, or short-term target, apologies, as we see price failing that area and moving back towards the downside. The other outcome would be to see price breaking higher than this 23.6 retracement area here, so that we can see price targeting the 38.2 Fib retracement area here at this consolidated range here, just above the 952 mark at the 38.2 here. So yeah, got to see a break above the 23.6 here to see price tackling this area here. Otherwise, what we could see, or ultimately, because we were trading below the institution moving average for the first time in a year, it's the last time we were trading above it was here around August, September of the last year. That would indicate a bearish break recently. If you see a breakout, the pullback, and a failure here, and we see a bearish engulfing to the downside, that would definitely confirm that we should be seeing negativity to the downside for the foreseeable future, and we should be targeting our long-term target back towards this 930, 92500 mark before we see price really falling to the downside. Targets such as the first swing low, if you look at the overall spec of things, you can see that the 23.6 of the low August low of last year to the high we're currently seeing just recently here at the late end of July. This is on a daily. You can quite clearly see now I have February tracements at 23.6, has just noticeably at 9:30 been the first price support. Get below the 23.6 on our long term, then we should be targeting that long term target below at 38.2 here, just below the 8900 mark before we see the 50 and the 61 to the downside being our our second and third target. So very, very important now. If you're seeing this now, this is all going to add up now. Trading at the underside of a price support and resistance level in the shape of the institution. Find resistance here, and then we should be targeting back towards that low of the 23.6 around this area for our first target. Break of that would definitely see price looking negative long term, and we should be looking down here at the bottom end of 890 for our first run. Last pair of the day is US dollar Japanese yen. Let's have a look and see what's happening on this particular pair. Okay, recently I mentioned that the major support and resistance level here at 78 had been targeted for a while, and we need to see a break and a close lower than that. That has come recently over the past couple of days. We've seen a juicy break below that area. So I'm just going to put my other prior major support and resistance level, the one below us now. That'll be our long-term target now. As long as price remains below the 78, that would be in the shape of the 76. 76 being a major consolidation support through August, September, October, November, December, January of last year. And you can see quite clearly a resistance level above it at the 78, which constitutes to the recent, or through the 2012 June onwards, as a major support. We've hit a break now. All our moving average above price. We've had a real exhaustion candle there just recently over the past week or so, and negativity on histogram is now showing us we needed to see a break. We had a break 3 days ago. We had an indecision candle, slight pullback, and now you can see prices heading lower. So as long as it maintains below 78, ultimately our long-term target should be the 7600 mark. Could see consolidation in between all this, but as long as it maintains below 78, then we should see the negative be long-term still targeting at 76. So if we move to our 4-hour chart, you can see that we had that breakout. We had a slight consolidation pullback yesterday, roughly around 6 p.m. GMT last night, and then prices just fallen over since then, and now we're tackling the low part of this pullback. So ideally, if you're looking for an entry on this particular pair, you might want to see a nice break below this little support that we saw yesterday forging out at 10 a.m. GMT on the 4-hour time frame. So a break below, nice close below 77.60 would constitute a nice breakout, and then we could look at the consolidation high here just above the 78 if you want to as your stop, and then target the lows down if you wanted to. That 7600 long term as our target. So as you can see the 4-hour here, everything's looking negative. We're trading below a major support and resistance level in the shape of the 78. All our moving averages are above price, including that institution moving average, the most important one. RSI is trading below the 50% line, so it's telling us that negativity is genuinely there. We're heading towards that 30%, and everything's looking good. So we just need a nice break below the 77.60 to give us an entry level. Hourly, this is my entry level candle. You can quite clearly see that RSI is trading still below 50. The 7800 is above price, so we know we've broken through a major support and resistance level recently, and all my indicators are pointing to negativity. Okay, so it's important. So you got to have as much probability in your favor, and everything's looking good at the moment. The histogram's looking great, red, negative. The most important thing, the institution has been broken as well, and as you can quite clearly see, price is trading below all the moving averages. One thing we need to see though is a break and close lower than that price support that we saw yesterday, and if that can come in the shape of a bearish engulfing candle below 77.60, that would set off the trend for the foreseeable future. That would be negative because you can see that price is making lower swings, which dictates intraday negativity. In this case, you can see that the intermediate trend is looking very negative intraday. So need to see a break 77.60 to confirm a nice bearish entry, and stop could be placed above the 78 here as a price support and resistance level. So that would constitute a nice stop area. Just work out how much pip or target level profit you can make with the risk that you're carrying, and be patient. Got to see a break. If we don't get that patient, or we don't get that break to confirm that we're seeing negativity in this, we could see prices moving sideways along this line over here for the foreseeable future. We don't want to be triggered into any trades not going anywhere, so we do need to see a confirmation break from the market to tell us that. Otherwise, that's it guys. That's my analysis for today. Please keep it simple. Please look at it to see if there's any major news announcement that's likely to factor into price action today or for the remainder of this week. Keep it simple, as I mentioned. Follow the rules. Back it up with sound money management, and you won't go wrong. See you tomorrow. Until then, trade serenely.